Hello, everyone. My name is Darren Joseph from HTJ.tax, and we're a team of cross-border tax advisors that seek to demystify the sometimes confusing world of international tax. And today we have the honor and the privilege of having an in-depth conversation with Senor Jose Aguilar-Sher. Jose, would you like to introduce yourself, please?
Of course. Thanks a lot, Darren, for the opportunity, and obviously happy to chat about the Spanish Texas. So I'm a tax partner in international firm Squire Patton Boggs, based in Spain, in Madrid, Spain, and obviously it was very used to working with international private clients, moving to Spain and planning ahead. So I hope we can make a useful conversation to anyone looking to move to Spain or having cross-border issues.
Fantastic. Appreciate it. And what about private trust companies? Same? Similar?
Yes. I mean, the only differences with, let me put it, what we call the private foundations, is that the Spanish tax authorities have made a differentiation that private foundations do have legal personality, so they have accepted that these foreign foundations are able to be considered as legal ownership of assets. Yeah. The problem that we have here is that depending on how it's structured, they could be a higher tax burden. Let me put it this way. We are considering that we transfer the assets to a trust. That's not possible, but we transfer the assets to a private foundation. The problem is that when the private foundation transferred to the beneficiary, it is considered as from a non-kingship owner transfer. So that means that when you have, let's say you have beneficial tax treatment for direct kingship ownership, transfer of assets from parents to a daughter, between spouses, that has a more beneficial tax treatment from an inheritance perspective. But if we consider that there's been a transfer from a person, from let's say the father or mother, to a private foundation, and then the private foundation to the daughter, son, then there's a negative tax impact, whether it would have gone directly from the father to the son. So then we have to be careful on how we structure. If, again, that works, if we transfer the property and then the beneficiaries are not resident in Spain and then they receive it under a different structure. But otherwise, if the heirs are resident in Spain, there would be a worse tax treatment. So that's why it would be tricky to work that around, right? So we can, from a wealth tax, it could work because we can transfer the property outside of the individual.
Right. And I guess what makes it more complicated, as you pointed out earlier, a lot of these structures are available in so-called non-cooperative or blacklisted jurisdictions for Spain. And therefore, you have that additional layer of complexity to deal with, which is, not something you want. Okay.
That's it.
Gotcha.
So if you're a 6, 7, or 8-figure investor, entrepreneur, or business owner who needs a tailor-made solution from a qualified team of professionals, we can help you achieve the international lifestyle, the freedom, and even the tax savings you're looking for. Visit us at htj.tax and live that international life.